Beyond U.S. stocks and bonds, we're hearing more about investing in things like emerging market securities and private equity. What do you think belongs in a typical client portfolio?
Well, I think people first of all have to look at the total portfolio, as everyone would in this conference would agree that you need to look at the total balance sheet and figure out things that are truly uncorrelated and go beyond just equities. So for instance, if someone has very long time horizons, they might be able to pick up the illiquidity premium if they're able to find it, because not every investment that's illiquid is accessible. But for someone thinking really long term, you might want to consider illiquid investments to harvest the illiquidity premium.
I think when it comes to asset classes, the same holds true across the board. I said we don't want to be lulled to sleep that equities is overpowering everything out there. That balanced approach, proper diversification, and when you look at that to control volatility, you may want to have some tactical and exposure into international is always key going forward. But look for a volatility and make sure you're fully diversified in all areas and all asset classes. And don't forget, don't run away from the fixed income. Just understand it.
Oh, it's so hard to say because there's so many different individuals involved, but typically emerging markets, it looks like, are going to do very well next year according to a consensus expectation, and also the U.S. stock market will continue to do well. It's a global thing, not just a United States thing. There's 45 countries that are doing very, very well.
Certainly we live in a global world. Developing markets in Europe are very interesting to us. Emerging markets are really interesting. And even frontier markets, which are further developing than emerging markets, are quite interesting to us. So we like a little of everything.